glad to have you along once again for Agriculture Today. What's going on in the grain markets? That's our first order of business today as we're talking once more with grain market economist Dan O'Brien, K-State Research and Extension. Dan, we want to spend a fair amount of time this week on what's developing on the bioenergy scene, what repercussions that's having on the corn and grain sorghum markets. And both of those markets could use a definite boost right now.
Well, yes. And with questions that have come up that have kind of shaken our confidence in terms of exports of these products all that much more, we're looking back to domestic use. And again, livestock feeding numbers on the one hand and these bioenergy uses on the other. So here this week as we try to look closely at what's happening in the ethanol market to see if prospects are still maintaining their strength for corn usage, we have a sound, I guess I'd call it a sound financial picture, but not one that isn't, I guess, vulnerable to one or two price levels for inputs and outputs go different direction than they've been going. And really the biggest issue, I think, when you look at the energy market is to stand back and look at what's happened in oil and gasoline. You know, strong uptrends. Light crude oil traded on the Chicago Mercantile Exchange has run up from about $40 a barrel way back last June, July, is now trading traded within the last day or so at about $71 to $72. So a tremendous increase. Gasoline from about $1.39 on the low, again, last June, July, closed yesterday at about $2.24. And we see that at the gas pump. You know, it's not difficult for anybody to realize that instead of paying $2 to $2.10 for gasoline, we're paying $2.65, $2.70 in a lot of places in Kansas as you drive across the state. So we're seeing that at the pump. And when we look at the use of our major feed grains that go into that sector, stand back and look at closing prices on Thursday, yesterday for corn. We have a range in Kansas of $3.86 to $4.34 and a quarter, with the top end price being a 35 over basis, over July. And you think, well, gosh, that's ethanol plants all over the country that are doing that. Well, really, they're not. The next highest bid in the U.S. is in Indiana at $4.09. So we've got literally a 25-cent advantage on the high side for corn prices going into ethanol plants in Kansas, and just indicative of the strength of that market in, quote, our neck of the woods. Grain sorghum's benefiting from that, and the USDA, as they project it off into the next marketing year, they're projecting some pretty strong usage of grain sorghum in the bioenergy world. And here in Kansas, the cash price for grain sorghum at ethanol plants 10 over July at $4.09. So, again, I guess for a lot of the other bids we see around the state, they had been 30, 40, 50 cents or more below the futures. Well, here we have a grain sorghum bid at 10 over. So there's something big that's been happening in terms of demand pull for feed grains going into ethanol plants in Kansas. And I think, as we've talked about, looking at the trends for corn and grain sorghum going into those plants, and the main products sold out of those plants, again, ethanol on the one hand, distillers grains on the other. You have really, I guess, a tale of two disparate trends on those products. The stronger of the two by far has been distillers grains. Ethanol prices in Kansas coming out of our plants are, well, again, yesterday's close at $1.28 to $1.37 per gallon for ethanol, and that is the lowest amount by at least a penny compared to Nebraska, also low, the Eastern Corn Belt locations on the high end getting up as high as $1.44, $1.47, $1.50. So we have not just national, international issues coming into play in terms of distillers grains being exported or being used all over, but we have domestic differentials for ethanol prices here right in the States. So biggest issue, I guess, for us, Eric, has come right back to the corn and grain sorghum usage figures going into these plants, and without question, We're seeing demand that's providing underlying support for feed grain prices, again, corn and grain sorghum, and for sellers of those crops, producers, sellers of those crops here in the state, that's really good, welcome news.
It is a positive in that we do see these higher bids for corn, grain sorghum for ethanol purposes here in our neck of the woods. On the wheat market side, the charts tell us, Dan, that the prices have shown very, very modest improvement. However, wheat exports, which are the typical main influence on the trade, are stagnant, basically.
It's a good thing we have, from the price point of view, it's a good thing that we have some impetus for new crop strength, because our old crop export numbers are finishing the marketing year at a slow pace. Basically, we've got, for the week ending May the 10th, we shipped out of the U.S. overall about 15 million bushels of wheat. We need a pace in the last 3 weeks of the marketing year of about 41 million bushels to meet the USDA's projection. Really a pretty similar situation for hard red winter wheat, where we came in at about 6.8 million bushels for the week ending May the 10th, need about 12 to meet the USDA's pace. So from an old crop perspective, gosh, it sure looks like we're going to come into the June WASDE report, World Ag Supply Demand Estimates report, and see the USDA have to adjust lower its export numbers, which will end up with higher ending stocks coming out of the old crop marketing, heading off into the new. Of course, right now, that's being overridden by concerns about the size of the crop that we'll be harvesting here in 2018. Of course, those concerns are substantial. Adding insult to injury, I guess, we have some sizable weather anomalies, hailstorms, whatever, out here in the western part of the state. And again, normally we don't give that much credence to one hail streak coming through and affecting overall large numbers, but it's just one more negative shot in those risky areas. A lot of short wheat around the state, et cetera. So when you look at where prices are at, closed yesterday at about $5.19 for the July contract, and that is above the lows of about $4.70 back in early March. That's below the highs of just under $5.70 that happened within the last 1 or 2 weeks. Eric, it would seem that we'll be relying on Romulo Lovato and others to give us in-the-field reports as we actually see what we have in about, as we get into early July. Mm-hmm. Who would be surprised that those numbers would come in just pretty short? Right. And I would wonder if we're going to end up with ending stocks coming out of this marketing year at 100 million bushels higher. Well, by the time you bring in the new crop, you could be 100, 200, or more million bushels short. So shorter exports in the old crop marketing year will be offset, and more so by the lower size crop as we head off into the 18-19 marketing year.
And lastly, commenting on the soybean complex, soy meal is selling on the export scene. Other than that, this is a more or less weaker trade.
Again, a tale of two directions. We've been going gangbusters in terms of soybean meal exports for a good while now, and strong crush to feed that exports has led to increased supplies of soybean oil. So soybean oil price has been moving to the lower side, which has kept costs down for biodiesel production, and they're making money. They're making money right now in terms of biodiesel plant profitability estimates. But yet, on the overall soybean side, the short crop that we've seen coming out of Argentina for beans has been offset, and probably more, by what's happening up in Brazil in terms of their anticipated soybean production. So, and add to that the trade discussions that we've seen, at least at the current time, soybeans have not been running with a lot of strength. Again, we've gotten up to about 10.90 about mid-February, dropped off to about 8.95 for a brief period of time there in about the latter half of March, and went back up and basically have come right back down to that same 9.95 level again. That would be on yesterday's trade. We'll see where it all goes, of course, but, Eric, we stand back and look at all these factors. There's two things that have surprised us in these markets in the last 2 months. That's the problems with the Kansas and Great Plains hard red winter wheat crop, and the problems in Brazil and Argentina with their corn production. Mm-hmm. We saw dryness earlier for Argentina. Now they're too wet. Southern Brazil's been affected by that. You bring these factors together, we're seeing support for the corn market coming out of these South American issues, and we'll see support for the wheat market, new crop wheat market, that we'll see probably coming into July and August. The issue for us will be, of course, in Kansas, that in so many places we're just going to be so short that we won't have quantity to sell into it.
Right, which is always the conundrum for producers who have crops that aren't doing so well, as so many are experiencing this year. Dan's notes once more on the grain trades in full can be found on agmanager.info, updated weekly. And Dan, much obliged. We'll catch up with you again next Friday.
Thanks, Eric. Take care.
That from Research and Extension, grain market economist for K-State, based in Northwest Kansas, Dan O'Brien. And you're listening to Agriculture Today.
While many people know hunger is an issue in developing countries, it is also a problem in our own backyards. In 2010, 1 in 7 Kansans struggled to put adequate food on the table. 2 K-State Research and Extension programs are tackling this problem. The Family Nutrition Program and Expanded Food and Nutrition Education Program reach thousands of Kansans in more than 70 counties. They learn how to eat healthy with a low budget. For more information about these programs, visit ksre.ksu.edu.
Agriculture Today is back now. Well, the deliberations on the 2018 Farm Bill are going full bore in the House of Representatives right now, and the Senate is working on its version likewise. Details emerging there of interest. And with us now is Risk Management Specialist Art Barnaby, K-State Research and Extension. He, of course, is more than a casual observer of those goings-on with the Farm Bill. What facets of all this are you keying in on right now?
Well, there's a couple of surprises in there. And the one that surprises me is what they are proposing to do with base. Under Freedom to Farm, which I got to think about that, it's been over 20 years ago, was instituted. And the reason it was instituted is we had to plant wheat in order to get our wheat payment on a wheat base and corn on a corn base. At the time, you go back and look, wheat prices were really cheap. The way the deficiency payment was set up, and you and I think, are the only ones old enough to remember that, is that when the price dropped below a reference price, or we called it a target price in those days, it's the same program, we just renamed things. Right. The target price was $4, which is now a reference price is $5.50. I don't know why they just call that the target price too. But you got to pay the difference between the $4 and the national average price. Well, when you had to plant wheat in order to get it, and the market didn't want more wheat, it's telling you that by low prices, what did farmers do? They continued to plant wheat. And they had to plant wheat in order to get the government payment. So they came along with Freedom to Farm. Let's decouple the payment to the base. And if you got a wheat base, we'll let you plant anything on that wheat base you want to. That included not only other program crops like sorghum or corn, but also things like alfalfa or brome grass or some other forage that was either could be used for haying or for grazing, etc. So they went to what produced more profits for that particular farm. Now, moving forward, we've had several opportunities to update the base for those who wanted to update their base. And what I'm referring to is once you went to this Freedom to Farm where you were planting anything you wanted to, I mean, some of these farms are planting as many as 4 and 5 different crops. Well, if you take your most recent history and you've got all those different crops planted in rotation, now you end up with what was before strictly a wheat base, but now you've got a bunch of small bases on 4 or 5 different crops. Now, if you're sitting in the middle of wheat country and you're thinking, well, my kids may not want to carry this farming operation on. How is it going to be more valuable when it goes to auction and the kids sell it off? Mm-hmm. Most of them are going to want the wheat base because other farmers in that area who are traditional wheat growers, they're going to want wheat base. If they're not set up to grow sunflowers, they don't really want a sunflower base. And as I said, anybody who wanted to update their base has had 2 opportunities to do that. So initially, they were going to require updating the base. And this came out of South Dakota, Senator Thune. His bill's now been withdrawn, so don't have a heart attack while I tell you the story. In his case, the first initial thing was going to require update, and you started to lose base acres if you haven't been planting the program crop on that base. For example, if you got wheat base and you've been planting something other than wheat, you started to lose base. Well, needless to say, that caused a lot of people
heartburn.
Yeah, absolutely. That's been modified a little now. Now you can plant any crop. If you planted any crop during that period of time, then you did not lose base. Now, on top of that, if you didn't plant the full base, so let's say you had a 150-acre base, wheat base, but you only planted 100 of it to program crop, and you planted 50 of it to alfalfa, for example. And it could have been brome grass that you use for hay or forage, whatever. It's just not a program crop. So in that case, that producer would lose 50 acres of base. Had he been planting that particular setup for the last, it looks like it's about 5 years. It depends a little bit on what years you set. Again, it's all history. You can't do anything about it now. You're stuck with whatever you did. But in that case, those folks I don't think will be very happy if they've switched from a program crop to growing alfalfa. In fact, I talked to one producer that had really made the switch. He was planting alfalfa on corn base, had even gone so far that he had gone in and bought one of these really large square balers. You know more than I do about this, but something like $80,000 for that, something like that. Sure. And you got to have a big enough tractor to run the thing too. You don't do it with Art's utility tractor, right? So that kind of equipment, he's committed to growing alfalfa, and he did so under the assumption of freedom to farm would allow him to do so and still continue to collect the corn payment. Well, depends on how much of his farm he converted over, but potentially under this Senate proposal, he could lose a lot of base acres. Now, at this point, it's a little better, not a little, it's a lot better in the House. Again, from the perspective of people who chose to plant other crops other than program crops. In the case of the House, if you planted, as I understand it, 1/10 of an acre, almost nothing, to a program crop during the 5-year period, historical period, then you didn't lose any base. So the House version for people who have planted non-program crops or underplanted their base to non-program crops, the House version will hurt the fewest people or will cause the fewest people to lose base. Okay, we don't know which way this is going to go. Yeah. And it's got to go through conference committee, and there's a long ways from this happening. What bothers me more is we've gone away from the philosophy of freedom to farm where we gave total planning flexibility without consideration of what the government was doing. And now we're going back and tying that payment back to base, at least marginally. And so, who's to say next time you actually have to plant wheat on wheat base? Now, they're not making you do this at this point, although that was the original proposal. So that concerns me in the longer run here.
Well, we'll see how that shakes out.
Probably everybody stopped listening because we scared them.
Hopefully not.
It's not law yet.
Yeah, keep that well in mind.
Not law.
However, you've yet to even mention what's being tossed out there in terms of reforming, to put it that way, the crop insurance program. And, of course, this is of great consternation to all of grain production agriculture.
I would rephrase that. Debate on how to screw crop insurance would be my result. There is that group that is heavily funded that continues to want to eliminate the harvest price. Just out at the University of Illinois on Farm Doc, hate to promote the other guy's product, but they've got a study there that is really something that I would encourage people to take a look at and review. Basically what they did was, along with the Illinois corn growers, they surveyed several states. Kansas was not one of them, but there were quite a few states, mostly, they were Corn Belt states, obviously. And to my surprise, what they found is 84% of the farmers who responded to the survey already have some of their 2018 corn crop pre-harvest sold as of April 1st. That would include both selling futures as well as forward contracting with elevators.
84% of advanced marketed as of April 1st.
Yeah, I was shocked. That number really shocked me. Gary Snicky is the lead author on this, along with Jonathan Koppas at the University of Illinois. They go on to say that much of that would be curtailed if you pulled the harvest price, because they understand what harvest price does, and it's been so misrepresented. All it really does is indemnify your guaranteed bushels that are lost at current market value. End of story. If you take away the harvest price, basically they're arguing to undercompensate farmers for their loss. This documents why that harvest price is really useful to farmers who are managing their price risk. And guess what? If they manage their price risk, they don't have to depend so much on the government to come bail them out if they're protecting themselves. I see that as good news that they're doing this. In addition to that, as long as they don't screw up the insurance contract, I can plan out into the future. So suppose we get a little hiccup on the corn crop this summer and corn goes up to $6 or $7. As long as you can assume the crop insurance contract is not going to change, what you can do is go ahead and start selling the 2019 crop and be fully hedged because of that harvest price. It's really a simple idea. I don't know why people make it so darn complicated. You're just guaranteeing bushels at replacement value. And it's obvious in the survey, and what their paper write-up tells you that farmers recognize. That's what's helping them. That's what's protecting them. It's a survey that I thought was extremely timely to deal with the debate going on in Congress over the crop insurance program, who they want to screw it up, in my opinion, by eliminating the harvest price. It really lowers the value of it as it ties into managing financial risk. Lenders obviously like crop insurance for good reason. If all their farmers are insured, they're pretty well protected.
Scores of interests in agriculture are quite interested in and concerned about preservation of the crop insurance program in its current forms. Lots going on, obviously, Art. Thank you for a quick look at all of this, and we will have more to talk of, certainly, as the Farm Bill continues to manifest itself. He's Risk Management Specialist Art Barnaby of K-State Research and Extension. Agriculture Today will be back over the K-State Radio Network.
Have you ever thought about where your food comes from? If you're thinking the grocery store, think again. Facts show that the American farmer feeds more than 129 people.
They are continually increasing and improving their operations. A wide variety of crops and livestock are grown in Kansas as well as the United States, providing food to your dinner plate.
Next time you see a farmer or rancher, thank them. For more information, contact K-State Research and Extension.
Agriculture Today continues now. Time to catch up on Kansas agricultural weather. Joining us via phone, Mary Knapp, Research and Extension climatologist at K-State, but she's not here on the campus today. Mary, you're actually attending a weather informational event out in Colorado as we speak, correct?
Yes, we are participating in the Rain Gauge Conference at Colorado, looking at COCORA's network and how it fits in with National Weather Service and other scientist efforts. And so it's been a very productive meeting. We have not had the hail and severe weather that has plagued parts of the plains, but I'll get to see that on my way back tonight.
And we want to talk about that because there was quite a spate of severe weather, various places around Kansas, some unbelievable hail taking place in the western part of the state.
Right. In western Kansas, we had some hail that was baseball in size, and it was a very narrow band, but what was really interesting about that storm was that it was a very long swath of hail, and you could note the rapid temperature drop and also the lingering melt of the ice from that hail in the precipitation gauges, and there will be a detailed analysis of that event in the e-update today. So if people want to get on to agronomy.ksu.edu and check that e-update story, they'll get some details on that particular storm. And that's not to ignore the hail that afflicted the central and eastern part of the state. Mm-hmm. And there were a couple of tornadoes in the Sedgwick County area.
And again, they've put together that summary article on that colossal hail event in western Kansas, the Wallace County vicinity. That's in this week's Agronomy E-Update newsletter out of K-State, agronomy.ksu.edu. Once again, click on the E-Update tab toward the upper right-hand part of that page. And that run of hail, Mary, was driven by 70-mile-an-hour plus winds. The combination there just strafing wheat stands within its wake.
Right. It's kind of like the last straw for that wheat out there where there's problems with drought and freeze and just about everything else that you could think of, and it's kind of like, all right, what's left? And we don't want to know what's left because it's likely to occur.
The moisture totals from this week's storms were fairly modest, were they not?
Right. Only the southeast and south central came close to their normal precipitation. Southeast actually fared very well and averaged over an inch, and that was about 1 3/4 times the normal for the week, and they've missed out on some of the earlier storms. So we did see some moisture, but again, the average was fairly low. So we're really hoping that the additional systems will at least keep us close to our normal and come on a regular basis, because temperatures have been much, much warmer than normal. In contrast to April, where we were running 6 and 8 degrees cooler than normal, this last week we were running between 2 degrees warmer than normal in the northwest to as much as 13 degrees warmer in the northeast.
That was the fear of many, that we would make an abrupt transition from winter to summer, and in some respects that is happening.
Right. One thing we should note is that we didn't have the super high temperatures. We did hit the 90s in most locations, but it was more driven by warm nighttime lows, and that's not going to have quite the same effect on crops as those temperatures bumping up into the 100-degree range. Yep. It will be more likely to produce stress on livestock if we keep those low temperatures up in the 60s.
And the drought monitor presumably has not moved much since we last spoke.
We have had some improvement in the central, south central, and southeast where the heaviest rains have fallen. But again, it's going to be very slow to improve unless we get a substantial shift in the pattern with near normal temperatures and above normal precip.
Well, tell us what's ahead. There are chances for rain once again this weekend and sporadically throughout the following week, it sounds.
Right, but the chances are not very high at any one time. So, again, what we're likely to see is very sporadic events. It's not likely to wash out all of your weekend plans, but you need to keep an eye on the sky. It's going to be isolated storms. It will be possible to produce severe weather with them, and there could be isolated heavy downpours that could produce some flooding issues.
Into next week, then, will we see a similar pattern continuing for the next several days?
It's basically looking like equal chances on the precipitation compared to normal, and a slight chance for warmer than normal temperatures. As we push that on into our June outlook, which was released yesterday, they are calling for warmer than normal temperatures statewide and equally likely to be above or below normal on the precipitation side. This next round, when we look at the quantitative precip forecast for the week ending next Friday, we're looking at getting an inch plus rain pretty much statewide. That extreme southwest corner may be down in the half an inch range, but again, still substantial. But the real moisture is going to be going to our north, where Nebraska may see 3 to 4 inches, and there's a very wide stretch across Nebraska for that higher rainfall amount.
The deeper we go into the calendar year, the lesser the chances we're going to get caught up on our moisture overall, though.
Well, if we get a rainy pattern in June and July, that could benefit the row crops, particularly the corn and soybeans. not much likelihood to make major improvements in the wheat condition and the wheat crop. It's getting too late to have much of a beneficial effect on it. Of course, if we have closer to ideal grain filling conditions, that will take an edge a little bit off of the hit, but any way you slice it, the wheat crop is going to be less than ideal.
No doubt. Well, safe travels back to the plains from the mountains, and we will talk again in studio with you next week and hopefully have some favorable moisture totals to discuss then. Appreciate your time, Mary.
Thanks, Eric. We'll talk to you next week.
Once again, she has joined us from Estes Park, Colorado, where she's taking part in the CocoRa's Weather Data Meeting. Mary Knapp, Research and Extension Climatologist at K-State. With that, our time is away for today. Thanks for being along with us, and enjoy your weekend. Eric Atkinson here. This has been Agriculture Today over the K-State Radio Network.